Good afternoon. The subcommittee will come to order. I want to welcome everyone to today's subcommittee on economic opportunity oversight hearing entitled Assessing VA Approved Appraisers and How to Improve the Program for the 21st Century. Before I begin, I ask unanimous consent that our colleagues Chairman Walden and Mr. Bergman be allowed to sit at the dais and ask questions. Hearing no objections, so ordered. The benefits administered by VA's Loan Guarantee Program are one of the crown jewels of benefits that are provided to American service members and veterans. Since its inception in 1944, the program has helped over 22 million veterans achieve their piece of the American dream. I'm proud to say that this program is also a win-win for taxpayers. Unlike most other VA benefit programs, the Home Loan Program operates as a partnership between the VA and the private sector. It is because of the partnership and VA's high underwriting standards that VA-backed loans consistently have one of the lowest foreclosure and delinquency rates in the country. This means more veterans are staying in their homes and fewer taxpayers are footing the bill. While this program is clearly performing well, it is the subcommittee's job to conduct oversight over this program as well as propose changes when needed. We need to examine all of VA's processes to ensure that requirements for appraisals are aligned with industry and that we are not hurting veterans' chances for purchasing homes because of outdated or unnecessary regulations. It is also our duty to the veteran, who is the customer here, and to the taxpayers to modernize processes so the administration of this program doesn't fall behind emerging technologies used in the private sector and end up like the systems in place to process disability claims, which created the long wait times and backlogs that are still occurring. Today, we are specifically going to discuss VA's appraisal process for veteran home buyers. Receiving an accurate and timely appraisal is crucial to protecting the homeowner in any situation, and it's even more important for VA guaranteed loans so that we protect the taxpayer's interest if the veteran does default on the loan. Currently, VA uses its own panel of approved appraisers, and the cost of these appraisals are paid for by the veteran as a part of their closing cost. While the timeline for completing a VA-approved appraisal remains efficient for the veteran in most instances, there are growing concerns that with some veterans in highly rural areas and with shrinking economy of appraisers nationwide, that this timeline could begin to increase. This is important for today's discussion because these wait times and higher costs could begin to affect a veteran's ability to close on a home. While I understand that in many of these instances, VA's hands are tied because the only option they really have is to increase the allowable fee for appraisals, I think it's time to examine new and emerging technologies to cut down on wait times and reduce the out-of-pocket costs of the veteran. My goal is to not advocate necessarily for wholesale replacement of the current appraisal process, but we should look at every regulation, every process, and ensure that they're meeting the veteran's needs, which is the goal that I know everybody on the panel and my colleagues on the subcommittee share. Before I yield to the ranking member, I want to thank the witnesses for being here today after given somewhat short notice. And I want to specifically thank Mr. London with VA for the professional and timely assistance he and his staff have always provided and continue to provide to this subcommittee on any home loan issue. The Loan Guarantee Service and, in fact, all the business lines under the VA Office of Economic Opportunity, including the Education Service, continue to be a model for the rest of the department as to how positive interactions with Congress should work. And that's why Chairman Rowe named me chairman of this subcommittee, right? He wanted to give me something that worked really well as a new member of Congress, and I appreciate that. I again thank the witnesses for being here this afternoon. I look forward, as I'm sure my colleagues do, to your testimony. I now want to yield to my friend from the great state of Texas, Ranking Member Beto O'Rourke.
Thank you, Mr. Chairman, and I want to thank you for calling this hearing, bringing together these witnesses who I'm so excited to hear from, and to thank you also for highlighting some concerns that are reflected in communities that we care about throughout this country and certainly in Texas. We spoke to a realty company in Odessa, Trora Realtors, who reflected the concern in the long wait times and the fact that there aren't enough VA appraisers right now, and those are things that we need to work on. And I agree with you, we don't need to replace the system. We need to find out where we can improve it without sacrificing or diminishing the terrific success that the VA has had in ensuring that veterans, Americans, have access to affordable home loans that outperform the rest of the market. And so I think we can accomplish both things. And I am so interested in hearing from our witnesses today, Mr. Chairman, that I will prove it by concluding my opening remarks now and turning it back over to you.
Thank you, Mr. O'Rourke. I want to recognize Dr. Phil Rowe, the chairman of what I call our parent committee, the VA committee, or the Committee on VA Affairs. Dr. Rowe.
Thank you, Mr. Chairman, and Arrington and Ranking Member O'Rourke for allowing me to be here today to discuss the VA's home loan program and the appraisal process. And I want to commend the work of the Loan Guarantee Service, as it's one of the most well-run business lines within the Veterans Business Administration. With that being said, I know there are rising concerns about the dwindling population of appraisers, as Mr. O'Rourke just said, across the nation, not just VA appraisers. And I want to ensure that we do everything we can to ensure veterans do not begin to experience long wait times to receive an appraisal. I thank the chairman for holding our hearing today, and so we can discuss how to continue and to provide timely and efficient appraisals to veterans who are using their VA home loan benefits, but also improve the process where necessary so that veterans, especially those in more rural areas where I live, receive an appraisal in a reasonable amount of time and in a way that doesn't force them to spend more out-of-pocket money. And I can tell you, having just sold a piece of property here in Washington, D.C., it ain't cheap to do it here. And when you see the fees and so forth, if you take a first-time home buyer, and I've been a first-time home buyer, that can be really an obstacle to you purchasing a home. I mean, when you have very limited dollars, and so much of it's chewed up on this fee, and then you wonder what's that for, and this appraisal's for, and that, and so on. I'm afraid it scares people away. But again, I want to thank you all for being here, and thank both Chairman Arrington and Ranking Member O'Rourke for allowing me to be here. Now I yield back my time.
Thank you, Mr. Chairman, and thank you, Mr. O'Rourke. I now want to recognize our first and only panel of witnesses today. With us, we have Mr. Jeffrey London, Director of VA's Loan Guarantee Service, and he's accompanied by Mr. Gerald Kiefer, who is the Supervisory Appraiser for VA's Loan Guarantee Service. We also have Michelle Bradley, the 2016 Real Property Valuation Committee Chair for the National Association of Realtors, Mr. Stephen Wagner, Vice President of the Appraisal Institute, and Mr. Russell Johnson, Chief Revenue Officer for Clear Capital. Thank you all for being here today. Mr. London, let's begin with you, and you have 5 minutes for your opening statement.
Good afternoon, Chairman Arrington, Ranking Member O'Rourke, and other members of the subcommittee. Thank you for the opportunity to appear before you today to discuss the Department of Veterans Affairs Home Loan Program and its appraisal system and process. With me today is Gerald Kiefer, Supervisory Appraiser, Department of Veterans Affairs Home Loan Guarantee Program. Our program's mission is a very simple one. We work to maximize opportunities for veterans and service members to obtain, retain, and adapt homes. However, our program does not generally make loans, build or sell houses, service loans, nor do we build adapted homes. Instead, we rely on lenders, realtors, appraisers, servicers, builders, and many others in the mortgage industry to help us deliver these benefits to our veterans, benefits which they have earned, many at great sacrifice. Through these strong partnerships, our focus on veterans and our continuous drive to innovatively enhance operations and performance, we have built a program that has guaranteed over 22 million loans totaling $1.9 trillion since the original GI Bill in 1944. During 2016, at a time when home ownership rate was at the lowest in 51 years, VA guaranteed over 705,000 loans, an all-time record last year. VA appraisal volume also rose over 70% between FY 2012 and FY 16, from 361,000 to 615,000. And despite the worst housing market crash since the Great Depression, which began around 2008, VA has successfully worked with private sector loan servicers to help over 630,000 veterans and their families retain their homes or avoid foreclosure since 2009. Further, VA's foreclosure inventory rate, the percentage of loans in foreclosure, has been one of the lowest foreclosure rates in the industry over the past 8 years, second only to prime loans. In fact, VA outperformed prime loans during and immediately following the market crash for 6 of the last 8 years. VA has worked to increase our program's efficiency and effectiveness by partnering with our mortgage industry stakeholders like our colleagues here today, the National Association of Realtors and the Appraisal Institute. These stakeholders have helped make our program work better for our nation's veterans. To ensure our partnerships remain effective, we maintain a robust oversight and risk management program to secure a world-class veteran experience, ensuring these private sector stakeholders adhere to our program goals, values, statutes, and regulations. In the appraisal program, the last few years have been challenging as we strive to meet our mission to provide veterans with accurate assessments of property values and reasonable assurance that the property meets basic standards for a safe, sound, and sanitary home. In recent years, the arena of residential property valuations, we, like all of the mortgage industry, have seen a decrease in the availability of qualified appraisers, particularly in remote or rural areas. As a result, there has been longer turn times for appraisals and competition for available appraisers. Fees in these areas have increased as lenders and programs compete to maintain a semblance of timely appraisal delivery. We have worked to streamline our appraisal business process to ensure there are no bottlenecks in delivering a timely appraisal. We have also taken several initiatives in the past fiscal year to increase appraisal fees, personalize and redouble appraiser recruitment efforts, and enhance our technology, all toward the goal of increasing the speed and quality of appraisals, while decreasing wait times for appraisal assignments. These efforts have been successful in significantly reducing the inventory of outstanding, unsigned appraisals, but some remaining inventory exists because no appraiser is available to immediately take the case. For the first time in recent history, though, we have seen that our attempts at recruitment have been declined. Appraisers cite they are too busy to take on additional work. We know the appraisal industry as a whole is challenged by the situation with finding, training, and retaining qualified appraisers. We look forward to working with our industry partners to collaborate on programs and policies that will bring qualified and talented individuals into the industry. Mr. Chairman, I appreciate the opportunity to speak today, and I look forward to answering any questions that you or the other members of the subcommittee might have.
Thank you, Mr. London. Ms. Bradley, you are now recognized for 5 minutes.
Thank you, Chairman Arrington, Ranking Member O'Rourke, and members of the subcommittee. My name is Michelle Bradley. I have been a realtor for 31 years and a VA appraiser for 20 years. I served as the 2016 chair of the Real Property Valuation Committee with the National Association of Realtors, and today I'm representing more than 1.2 million members working in all aspects of real estate. NAR is a strong supporter of housing opportunities for veterans. The VA Home Loan Guarantee Program is a vital tool, providing veterans with centralized, affordable, and accessible method of financing home purchases with a zero down payment option. According to a recent NAR study, veterans made up 18% of all recent home buyers, and 54% of them used a VA guarantee loan. VA loans are among the safest loans made, with one of the lowest foreclosure rates. Much of the credit can be given to the VA appraisal system and its appraisers. The VA uses a panel of approved appraisers, and appraisals are assigned in rotation. Every VA appraiser must have a minimum of 5 years' experience and must provide several letters of recommendation attesting to their knowledge and their character. These appraisers, myself included, strive to provide well-documented, credible appraisals in a timely manner, using both cutting-edge technology and traditional methods of analysis. Of course, nothing is perfect, NAR is aware of complaints that have surfaced regarding the VA's appraisal system, particularly in rural markets. From the buyer's or agent's point of view, it takes too long to get an appraisal, so there must be a shortage. The sales price and the appraised value are sometimes far apart. As a VA appraiser in rural Western Pennsylvania, I know these issues well, but there is more to the story. Let me give you an example. There is a rural county near me where there are only 2 VA-approved appraisers. These individuals also happen to be sales agents who are related but work for competing companies. If a buyer uses a VA loan to purchase a home in that area, and one of these 2 related appraisers happen to be involved in the sale, both have a conflict of interest and neither can complete the appraisal. The VA then has to find an appraiser from an adjoining county, which results in a delay in loan processing. Now, there are qualified appraisers in that county. However, they are not choosing to seek appointment to the VA panel. In my personal opinion, I am not speaking for NAR here. This is my personal opinion. This is because the VA fees are not always adequate in light of the requirements for completing highly rural market assignments. This is especially true in these rural areas where simply making exterior inspections and driving by the outside of our comparables may take several hours. Over 50% of appraisers are dissatisfied with their compensation and feel overburdened by regulations. This is not just an issue in the VA system, but this is a general concern in the industry. Many appraisers are having difficulty taking on trainees, and the requirements to enter the profession can be quite burdensome, which could affect future numbers of appraisers. NAR has been hearing stories of buyers regardless of the type of financing, losing out on a home because the appraised value is different than the sales price. Unlike other forms of financing, the VA has a process called the reconsideration of value, sometimes referred to as the Tidewater initiative. This allows a lender a way to provide relevant market data to appraisers prior to the completion of the value opinion. The purpose of Tidewater is not to make sure the transaction works. The purpose, as it's intended, is to assure the veteran and the lender that the appraiser has reviewed all relevant data. If the sales price is not supported by the appraisal, this protects the veteran from paying too much and is also a reason the VA enjoys a very low foreclosure rate. NAR is willing to work with members of this committee and the VA to address the issues brought up in this hearing, and I commend you members of this committee for your support of our veterans, and thank you for the opportunity to address you today on this important issue.
Thank you, Ms. Bradley. Mr. Wagner, you're now recognized for 5 minutes.
Good afternoon, everyone. On behalf of the Appraisal Institute, thank you, Chairman Arrington, Ranking Member O'Rourke, and members of the subcommittee for the opportunity to testify on improving the VA appraiser fee panel. The Appraisal Institute supports the basic framework of the VA fee panel in contrast to what is currently found in the Federal Housing Administration or the private sector. By comparison, the structure of the fee panel facilitates a greater degree of appraisal independence and represents a much more positive environment for real estate appraisers. Outside of the VA, appraisers often face a litany of challenges ranging from marginally qualified lender review processes to stifling fee compression. The panel is somewhat insulated from these trends in that it is a screened list of approved appraisers that are on a rotation. The VA appraiser fee panel enjoys support from other objective observers. A recent review by a reputable think tank concluded that the VA processes and procedures provide more taxpayer protection and help to produce lower defaults and loss severity. Generally speaking, the VA fee schedules tend to be more indicative of customary and reasonable than what is found in the private sector today. This is largely because the schedule is developed independently by the VA through surveys of local market participants. Another positive, the VA has in place an innovative process referred to as the Tidewater Initiative that requires the appraiser to contact a party to the transaction when the appraisal does not support the sale price. This provides an opportunity to offer more information to the appraiser for consideration. As a former VA panel appraiser, the VA staff I encountered were extraordinarily dedicated to veterans. I either personally witnessed or heard stories of veterans being treated with respect and assistance in times of challenge that have protected and benefited them. In that vein, the panel is integral to protecting veterans, the VA, and the public interest. Significantly changing the VA roster platform that provides for a critical level of independence would be a mistake. Furthermore, seeking alternative valuation products such as automated valuation models or even desktop appraisals would also be a mistake in terms of collateral risk mitigation. I will acknowledge, on occasion, the lending industry experiences high loan demand, which can lead to appraisal delivery times that are elevated to less than optimum levels. Though these intervals can be somewhat protracted, they are temporary, as witnessed recently. Changing a working system is not the answer. Instead, we offer suggestions to enhance an already workable and successful system. From time to time, the VA recruits appraisers to the fee panel. Some of our members report an inconsistent response with regard to approvals. We recommend the VA enhance recruitment efforts by targeting appraisers who have completed peer review requirements for professional appraisal designations. The panel would benefit from greater involvement by highly qualified appraisers, along with exploring a standby list of appraisers. We also recommend to improve VA lender processes relative to timeliness issues by encouraging lenders to provide appraisers with better property information on the front end of the appraisal assignment. Lastly, we believe the panel would be much more attractive to appraisers if concerns about past due or delinquent appraisal fee payments were rectified by the VA. We think these enhancements can preserve the integrity of the panel, first and foremost to the benefit of veterans. Thank you for the opportunity to testify today, and I look forward to taking your questions.
Thank you, Mr. Bradley. Actually, Mr. Wagner, that would be your name. Sorry. Finally, Mr. Johnson, you're now recognized for 5 minutes.
Chairman Arrington, Ranking Member O'Rourke, and members of this committee, on behalf of Clear Capital, I'm pleased to appear today to talk about new ideas of efficient appraisals and how they can help veterans realize home ownership by utilizing the home loan program from the United States Department of Veterans Affairs. I am a veteran of the United States military. I was a deep-sea diver in the U.S. Navy for 4 years. When I left the U.S. Navy, becoming a homeowner was a top priority. I wanted to start a family, provide a safe place for my family to grow and call home. I started the process by asking questions of the professionals in the real estate and lending industry, questions that would help me navigate this process that most people only experience a couple times in their lives. I always asked if I could use my VA loan benefit. I was told it's more expensive. I was told it takes longer, and thus sellers are less likely to accept a VA-backed offer. I realized that I was steered away from using my benefit and toward conventional mortgages. We know this isn't the position of the VA or relevant national, state, and local trade organizations. Nonetheless, this was my experience. I work for Clear Capital now. Clear Capital's focus is applying new technologies to solve real estate valuation problems with the highest degree of integrity, quality, and customer service to the mortgage, lending, investing, and housing industry. Over the past few years, and across all home purchase products, VA and non-VA loans, appraisal wait times and costs have risen significantly in some pockets of the country. In large part, this is a result of a shortage of appraisers in some markets. The shortage of appraisers is slightly exaggerated with the VA program because, as I understand it, the appraisal is more specialized, using separately approved appraisers to ensure greater protection of the veteran homebuyer. This is a valuable benefit. Clear Capital suggests that the VA consider the use of a desktop appraisal based on physical inspection of a subject property by an industry professional. The product is a hybrid of the traditional appraisal process and leverages a qualified arm's-length professional performing a visual inspection of the subject property and providing other market insight and analytics. Desktop appraisals are compliant with both Uniform Standards of Professional Appraisal Practice, USPAP, and the Interagency Appraisal and Evaluation Guidelines. The desktop appraisal process allows a single appraiser to complete several more appraisals per day than is possible with the traditional approach. In some parts of the country, an appraiser spends 30% of his or her time driving to and from a property. This is not a productive use of time for these specially trained, skilled, and knowledgeable professionals. Today's technology makes it possible for detailed property measurements, characteristics, market comparables, and other detailed information to be delivered to the appraiser within minutes of collection. This wasn't possible decades ago when the current model was created. Today, we can quickly provide the appraisers with the information they need to perform accurate and timely appraisals of the highest quality. Appraisers completing these reports would remain subject to the same licensing and certification requirements, as well as the standards provided under USPAP. Likewise, the process could be rolled out in agreed-upon cases for completion by appraisers on the VA panel, and subject to appropriate quality assurance reviews. To conclude, the VA Home Guarantee Program provides our veterans and active duty personnel with an incredible and unique earned benefit. It has allowed them to improve their economic opportunity by accruing home ownership equity. This earned benefit, thanks to the VA staff and lenders, performed exceptionally well, as stated earlier, in the last downturn. At the same time, we must work together to ensure that going forward, this program continues to serve the veterans and active duty service members efficiently, cost-effectively, and carefully. I want to thank the Economic Opportunity Subcommittee for having me in today, and I thank the VA staff for their dedication and service to veterans.
Thank you, Mr. Johnson. I'm delighted to have with us Chairman Greg Walden from the Energy and Commerce Committee. I know he has a great interest in this issue, and in the interest of your time, sir, I'd like to give you 5 minutes for comments, questions.
Well, I thank the gentleman, Mr. Chairman. Thank you very much. And to the members of the committee, thanks for your courtesy in letting me come and share a few comments. And I appreciate what the witnesses have had to say. Your testimony is most helpful. And I appreciate your committee taking a look at this topic. Throughout my district, I've heard from veterans who are waiting a long time, too long, frankly, to be able to get an appraisal on their VA-backed home loans. You all know this is going on. I've had a dozen or more different veterans contact me for assistance while facing significant delays in receiving their VA-guaranteed home loans due to this appraisal backlog. I've also heard from realtors and loan officers who find that in their efforts to secure homes for veterans and their families, receiving a VA-approved appraisal is the most challenging and time-consuming requirement. I've had 7 town hall meetings in my district so far this year, and I think in just about every one, this topic has come up as an issue affecting our veterans. So and these are in different parts of Oregon. Some of these veterans and their advocates have waited up to 9 weeks to even have an appraiser assigned to their case, Mr. Chairman, 9 weeks, making them far less competitive as prospective buyers in the housing market. One veteran even lost his prospective home when his interest rate lock expired as he waited for an appraisal. And I think we would all agree that's simply unacceptable. At the end of last year, I wrote to the VA Regional Loan Center to ask how we could address this problem head on, and I hope in your hearing today we can get some answers to that. I know that higher appraisal fees have been approved for some counties in my district. I'd heard that was one of the issues, that if you were doing a VA appraisal, you didn't get paid as much if you were doing another kind, and I know they've tried to address that. The VA has managed to cut down on some of the appraisal backlogs in rural Oregon, and I appreciate your attention to that. But in my conversations with Realtors, Veterans Group, and VA employees, I've heard that the appraisal shortage is a market-wide issue that may soon spill over into other federal programs and eventually into the private sector. Increased federal regulations and barriers to entry for would-be appraisers seem to be moving us in the wrong direction. I think that's something we all have to figure out, and that's not just the purview of this committee, Mr. Chair, but I think financial services and other committees probably have a role in this as well, but it's serious. An increase in VA appraisal fees may help in the short run, but looks like we need some other policy changes as well. So we have to look at the longer term issue, but in the meantime, we must take care of our veterans. We must make sure they're not handcuffed by a process when they're just trying to get a roof over their heads. So I look forward to working with you, Mr. Chairman, and Chairman Rowe, and my colleagues on this committee to fix the problem here for our veterans, but also for others across our country. And I greatly appreciate the courtesy of being able to share those comments, and I appreciate your leadership on this, Mr. Chairman. And I thank you, and I return the balance of my time.
Thank you, Chairman Walden, and thanks for your great interest in this, on this issue and for your time. Now, I'd like to yield 5 minutes to the ranking member, Mr. O'Rourke.
Thank you, Mr. Chairman, and I'd like to thank the panel for their comments and for ensuring that we understand your concerns, but also what I think we're grateful for is some of the suggestions that you've offered to improve the process. I wanted to ask Mr. London, how often is the Tidewater provision employed?
Yes, thank you for that question. To my knowledge, the Tidewater initiative is invoked, but we do not keep regular statistics about how often that initiative is invoked. But I'm going to turn to Mr. Kiefer, who may have more information about, generally speaking, how often that initiative is invoked.
Thank you, Chairman Arrington and Mr. O'Rourke. We do have automated systems these days to track some of these issues, and we do track, just recently have started tracking what is called the Tidewater Initiative. It's been described briefly, and it was developed in the Tidewater area of Virginia, where we were experiencing very much the situation we're hearing about today with delays and property value appraisals not meeting sale prices and so on and so forth.
I think what I'm trying to get at, sorry, and I'm sorry to interrupt you just because I don't have a ton of time, but okay. I want to know how often that's used and what that adds to the weight for someone, because then I want to get to the recommendation made by Mr. Wagner that there be better property information on the front end, and I wonder if that would obviate the need to use Tidewater, and I may not understand the process.
No.
Totally. So if you can tell me how often it's used and how much that adds to it, that would be helpful, and then that helps us assess Mr. Wagner's recommendation.
Our recent data shows that the Tidewater Initiative is employed approximately 24% of the time. It adds typically 2 days to the appraisal process. The process calls for the appraiser, when they recognize they're not going to meet the sale price, that they must contact the lender or the lender's point of contact and give them 2 days to submit additional support for the case. So it typically is a 2-day issue.
That's helpful. And so when we heard from the chairman of the Energy and Commerce Committee, gentleman from Oregon, his concern about folks waiting 9 weeks The concern is probably with those appraisers who choose not to work with the VA and within this system, and perhaps just the number of appraisers in general who are willing to do this kind of work, that we need more appraisers in those underserved communities. I wonder if Mr. London or Mr. Kiefer could also comment on Mr. Johnson's recommendation for desktop appraisals. Seems like, you know, we know more and more, especially with Mr. Wagner's suggestion that we include more on the front end about the properties and relative valuations in the area, that all of that could be put in the front end, and we could have a pretty good idea of valuation and a pretty good idea of the borrower's ability to pay back. What are your thoughts on his recommendation?
Yeah, first I want to respond by saying that VA currently has a process where we use front-end data. We have a tool that's been developed by CoreLogic Corporation, where they are, not only are they an AMC, or appraisal management company, but they also are a data aggregator, and they collect front-end information across the entire marketplace. So today, every VA appraisal that is completed actually goes through CoreLogic system to look at the market data that's available on the front end, and we actually grade every single appraiser and every single appraisal to ensure that it meets VA standards, and that it also is using good information to determine value. The other thing that it helps us to do is to allow us to conduct oversight of the appraisal process as well. One of the challenges that we've had, and I think this is a market problem, is in some of the rural and remote areas, these systems do not have enough data to have the integrity that you would need it, to have the confidence that you can rely on the data. So that's one of the limitations that the industry is dealing with. So having a geographic competency to actually go in and look at the properties, especially if you are an appraiser who's familiar with that territory, has been something that has been very helpful. But I'll turn it to Mr. Kiefer to see if he has additional thoughts.
You know what, and I'm going to have to take that for the record. I am out of time, but I appreciate the answers, and I've got some follow-up questions that we may submit for the record. So
I look forward to addressing those. Thank you.
Yep.
Thank you, Mr. O'Rourke. Now I want to yield 5 minutes to Mr. Dr. Winstrom.
Thank you, Mr. Chairman. I'd like to yield to Mr. Bergman.
Thank you, Dr. Winstrop. Thank you, Mr. Chairman, and thank you for inviting me to be here for a few minutes today. Veterans have given a lot for their country. They took on life very, in tough situations. We shouldn't make it tougher for them when they come back. We know that. That's why we're here having these hearings. I represent the 1st District of Michigan. A lot of veterans, higher than a national average, almost double the rest of the veterans in districts within Michigan, but a very rural district. Now, do I understand correctly, and this is anybody to answer, I don't have this specific, when a veteran applies for a VA loan for a specific home or project, they need 3 comparables?
That's correct, sir. In our policy, we do say that the appraiser submits at least 3 comparable properties.
Is there a geographic distance? Put the pin in the middle of the project and what the distance is?
In our guidance, we're somewhat general. We say that the comparables have to be in close proximity to the properties. But as I alluded to, there in some rural or remote areas, the next comparable could be miles away, and the appraiser would have that knowledge, so they're able to use that.
Yeah, how about potentially hundreds of miles? And the point is, what do we have in your system for relief when we have the delay in the process because the appraiser cannot meet the requirements for the comparables, yet everything is validated? I guess I've heard from veterans, I've heard from realtors, I've heard from home builders in our area, they can't comply with the rules because of the sparse population. What do we do?
Well, again, we say that you need to have at least 3 comparable sales. However, we do have some latitude in our process to accept the available information that the appraiser has. including if the property is not in close proximity. Because one of the things that you would look to, and I'll turn it to my appraiser professionals to explain it a little bit more in depth, but you can look at like properties that have similar characteristics of the subject property that you are examining.
The challenge we have is the tyranny of distance, and because veterans coming, a lot of times we'll be building a new project, potentially getting a VA loan, and there hasn't been a whole lot of new housing. So what we are looking for is a way for those appraisers to somehow create a valid appraisal so that the loan can be approved, so that veteran can either buy or build that home when there really isn't three comparables within any relatively close distance. And that's all I'm looking for, is how do we do that?
There are some conditions at times where it can be a really big challenge for an appraiser to accumulate data that would fit within the parameters such as Mr. London was referencing. In those situations, when you have a professional appraiser out there in the field taking a look at that type of situation, he can use his judgment to say, go back in time. Not all the comparables have to be 6 to 12 months, within 6 to 12 months. Unfortunately, maybe it's 18 months or something like that, and find a comparable perhaps in a competitive market that's representative of the subject property. So there's more than one way to do this. Certainly the parameters that Mr. London mentioned would be ideal to begin with, and that's where you start. But sometimes you have to make adjustments and be flexible and use your judgment.
Okay, so what I hear you saying is, when I go back to the first district, I can find out who the appraisers are, and I can tell them that they can use their best judgment.
I think that they can use their best judgment with an awful lot of support and explanation.
Yeah, well, no problem. It's the commonalities are easy to handle. It's the differences between the norm and those edges wherein lies some situations fall through the crack. And I just happen to live in a district where that is, quite honestly, the majority of our 24,000 square miles.
Clearly, that's a challenge, and in the underwriting area, they need to be able to have adequate support and explanation from the appraiser that shows that this is the best that can be done at this point, and that should make it acceptable.
Well, thank you. Mr. Chairman, thank you very much for the time, and I yield back.
Thank you, General Bergman, for your time and interest. And now I will yield 5 minutes to Mr. Takano.
Thank you, Mr. Chairman. I want to ask Mr. London a few questions. Mr. London, thank you for the work you do to ensure that eligible veterans and their families are getting into safe and structurally sound homes, and through the appraisal panel process, owning homes that represent a sound financial investment. Clearly, these efforts on behalf of veterans by the Loan Guarantee Service have been successful in that, as you said, VA's foreclosure inventory is so low. Can you describe a little more in detail how you're attempting to deal with the shortage of VA-approved appraisers in rural locations?
Yes, thank you for that question. What we have done, especially in areas where we've identified that either they are rural or remote areas or they are hot real estate markets, we have taken a look at the appraisal subcommittee's available appraisal lists, and we've literally contacted every single licensed appraiser in those remote and rural areas to invite them to apply to be members of our panel. We have had some success over the last year in doing so. Because of this initiative, nationwide, we've added over 700 appraisers to our fee panel, and specifically in Washington, Oregon, and Colorado. In the past 6 months, we've added over 120 appraisers to our panel through this recruitment effort. So the first thing that we did is just identify where we are in a severe need, and we, again, contacted every single licensed appraiser to invite them to apply to the panel.
How do you decide what is customary and reasonable compensation in booming markets where appraisers are in high demand?
Yes, we actually survey lenders and other program participants who are actually on the ground in those specific geographic markets, and we ask them for real-time information and what they're experiencing and what the going rate is for an appraisal in that particular area. We used to do those surveys on an annual basis or sometimes on a biannual basis, but more recently, we've been looking at these fees on a quarterly basis to make sure that we're reflective of the current marketplace.
Wow, can it change that fast? How do the VA panel appraisers and lenders negotiate a mutually acceptable fee in a high-demand situation, and when it is inconsistent with those set forth in the VA schedules? What does VA do?
So from a VA perspective, the fee that we permit the veteran to pay is the fee that we set forth. However, that does not preclude a veteran, if he or she wishes to choose to pay a premium for an appraisal assignment, the lender could offer that, and the veteran can make a decision on whether or not he or she is willing to pay the difference. But VA's fee is the fee that we say is permissible for that assignment.
And what should industry be doing to encourage qualified appraisers to join local VA panels?
Well, one of the things that we have to do is make sure that the appraisers don't have a misconception about the VA program, because some may be thinking about old experiences that they've had, or even some of their colleagues have had sometimes a decade or more ago. The VA program is extremely flexible, and we make sure that we provide the appraisers with clear guidance on what we expect, and we also ensure that they understand that we're good partners with them. So, well, that's the first thing that we have to do, is make sure that we get over the misperception. And I'll also use as a second point, which you were questioning me about, and with the fees, we want to make sure that we have competitive fees. And I think that one of the things that we really don't have to educate appraisers on is the fact that when they do a VA assignment, they're getting the full fee, whereas if they were doing a conventional appraisal, sometimes they do that through an appraisal management company, who that entity may take a portion of the fee. So it was discussed earlier that sometimes appraisers have to travel long distances to go to their assignment, and they have that burden of those extra expenses. With the VA fee, you get the full fee for that assignment.
Did you anticipate the 70% appraisal volume increase from the years 2012 to 2016?
Well, we've enjoyed in the last few years an increase in the program and veterans and service members taking advantage of their benefit. So we were aware of the increase, and that's one of the reasons why we implemented the tool that I mentioned, the tool that we have with CoreLogic, so that we can make sure that we have an appraisal process and system that can meet veterans' needs and demands. And actually, the recruitment process that I described actually began a few years ago, where we noticed that we were losing some fee panel members, and we had various recruitment efforts over the years to ensure that we had adequate appraisal fee panel members around the country.
Thank you. I'm sorry, Mr. Chairman, I went over time.
Thank you, Mr. Takano, and now yield 5 minutes to Dr. Winstrup.
Thank you, Mr. Chairman. I appreciate everybody being here today. I mean, in my opinion, this is what we're supposed to be doing, right? To be able to sit and discuss any nuances or problems that we're having within our programs and try and work those out. And I appreciate the efforts of everybody involved here today. I get, Mr. London, one question I have is, what's the reason or origin for the different standards between VA appraisers and FHA appraisers from the beginning?
Some of the requirements that we have are statutory. For instance, it was described earlier that you have to have recommendations from other appraisers to join the panel. Also, that you have to go through a background check, things of that nature. Some of those requirements are statutory, so it begins there.
No, I appreciate that. I have a VA home loan. I'm pleased to say, actually. I think one of the things that helped us is that we were looking both at VA and then outside of a VA home loan through the bank, and our appraiser happened to also be a VA appraiser. And so things went pretty smoothly, where at one point people thought it was going to be a glitch, but it ended up working out for us. But again, that's really the only question I have, and I do appreciate everybody being here, and hopefully we'll make the process smoother and continue to help more veterans through the process. Thank you.
Thank you.
Thank you, Dr. Winstrup. And now we'll yield 5 minutes to Ms. Rice.
Thank you, Mr. Chairman. So we spent a lot of time talking about the effect of the appraisal process in rural areas. I happen to come from the state of New York, which has some of the highest home prices in the country. And I know that there have been times when veterans have come in expressing frustration with the fact that it's almost impossible to get a loan in the amount that you need to put a roof over your head in the places where you want to live. Just one quick question. There was a note in here that said that there was one loan that was guaranteed in Malibu, California for $9 million. I was just curious about what that's all about.
Yes, I'm familiar with that case, and I actually looked at that appraisal myself to make sure that it was accurate. Unfortunately, some of our veterans and service members, just like other Americans, they do well. And
I just wanted to make sure that was the reason.
That was correct.
It was not just a total outlier.
And the interesting thing about that particular case is that veteran obviously had the means to purchase a very expensive home. But as we stated earlier, this program is a benefit entitlement program, and that retired officer wanted to use his VA benefit, and he obviously put down a sizable down payment on that loan.
Well, as he should have been able to, for sure, he or she who could afford it. So what are the instances where there is a long period of time to get an appraisal, and in how many instances does that affect the interest rate, say, that a veteran can get from a financial institution that is working on this program?
One of the things that we encourage our lender partners to do is that if they have a deal that is, there's a risk that the seller will no longer be involved in the transaction, or in the instance that you're saying that the interest rate is about to expire, we encourage lenders to contact VA so that we can get involved to make sure that we can find an available appraiser on our fee panel to take that assignment more quickly. And more times than not, when lenders do reach out to us, we're able to work with the lender and with our appraisal partners to find an appraiser to take on that assignment more expeditiously.
And so in a place like New York, where home prices, like other places in the country, are high, I mean, is there an access issue here? I mean, I know today we're talking about the appraisal process, but that's just one aspect of it. I mean, if you are living in an urban or a city area that, in any of the boroughs of New York City, I mean, it used to just be Manhattan that you were priced out of. Now it's hard to find a home in Queens or Brooklyn that you can afford. So how do you address that, especially in the instance where they're not required to put any money down? Sure. And in those instances, do you have higher default rates than you do elsewhere around the country? Because I know that it didn't say the percentage, but there was, whatever your default rate is, it seemed pretty low, as compared to the private sector.
Sure, and thank you for that question. The first point that I would like to make is that VA, by statute, is limited on the amount that we will guarantee. So right now, we're currently tied to the Freddie Mac conforming loan limit. However, that does not preclude a veteran from using his or her VA loan eligibility to purchase a property. Basically, what a veteran would do in a situation in a high-cost area that the Freddie Mac conforming loan limit does not meet the sales price of the home is he or she would have to pay a down payment at that point for 25% of the difference of the amount above the Freddie Mac conforming loan limit. So the veterans can still take advantage of the VA home loan program, and certainly can make a smaller down payment than if they chose another loan product. The second thing that I would say is that when it comes to cost, I think we see a lot of veterans take advantage of the program not only because of the down payment aspect, but because the fees for VA are much less than other alternative loan products. So so even in high cost areas, veterans can take advantage and save some of the money that they have, or will not have to come with so much money to the table because the fees for VA are much lower. And for almost the last 2 years, VA loans have enjoyed the lowest interest rate in the marketplace than any other loan product. So veterans are incentivized to use the VA loan program even in high cost areas.
Well, and they certainly should be the recipients of that benefit. I think it's one of the great moral failures of this country that we have even one homeless or jobless veteran. So thank you all for everything you're doing.
And I do want to address the one point that you made about loan performance. I apologize. Based on our analysis, internally in VA, we found that high cost loans, if you will, even though VA loans overall enjoy a low foreclosure rate and a low serious delinquency rate, we found that the higher cost loans actually perform better than even the lower cost loans.
Well, now maybe you can let us in on that little secret, how that's happening. That would be great. Thank you all very much. I yield back. Thank you.
Thank you, Ms. Rice. Now I'd like to yield 5 minutes to Mr. Rutherford.
Thank you, Mr. Chairman. Ms. Bradley, let me ask on your study that the National Association of Realtors conducted, I noticed that the foreclosure rate for the VA is great, actually, if you look at it, particularly between 2009 and 2014, they were the lowest of any other loan. What I'm wondering, so that's a good thing. So the quality of what they're doing in protecting veterans, because it's a protection for them too, because they don't get foreclosed on by buying a home that they can't afford. Did you look at rural versus urban in the wait time situation?
I was not part of that original study. The VA foreclosure rate is enjoying a very low foreclosure rate because of the dual. There's the lender can underwrite the appraisal. The VA then does their own oversight. So that dual protection protects the veteran, ultimately giving a zero down payment. And if I may address the rural aspect of that, it's not just about fees, folks. It's not just about the appraisal fees.
Right.
Sometimes the VA, or the appraiser, simply cannot take the assignment. If we do not have the data to develop geographic competency in that market, we simply cannot take on that assignment. So
Right,
it's not just
and that kind of leads to my next question for you. Mr. London, when did CoreLogic come into use in the appraisal process?
A little over 3 years ago.
Okay, so that would have been 14, roughly?
Yeah, about 2013.
Okay, and has there been a change, Ms. Bradley, in the wait time since then? Do you know?
I would like to emphasize that overall, the wait times are not extraordinary.
Okay.
We have had a perfect storm in our country over the past few years. We have historically low interest rates. We have pent-up housing demand from all of these borrowers who wanted to buy a home but were nervous after the 10 years ago we had the biggest housing collapse in our recent history. So we have a pent-up demand. And we also have a lot of veterans looking to purchase a home now because we have so many more vets. So we have a perfect storm of situation. It is not a nationwide problem. This is in highly rural markets that they are experiencing that.
Okay.
I'm from the rural market myself, and the VA has called me often and asked me to do appraisals in an adjoining county. If I don't have access to that data to be able to develop a competent appraisal that is credible, that could protect the veteran by making sure that there's sufficient collateral for that loan, I
Right.
can't take that assignment.
Right. Let me ask you this. There's from 2004 to 2015, there was a great loss of certified appraisers, but there was a huge, I'm sorry, licensed appraiser. There was a huge drop in the licensed appraisers, but there was a 20% increase in certified appraisers. Does VA use certified appraisers, and is that part of the issue here as well?
No, actually, VA uses both licensed and certified appraisers.
Okay.
Have to have a minimum 5 years experience. That is not part of the
So that's not an issue at all. Okay. And I would also ask, Mr. London, what is your view of desktop-based appraisals? Mr. Johnson, I think, sounded very supportive of them, thinks that they are effective. Does VA use that very often or at all?
We currently do not do desktop appraisals as described today. However, as I mentioned, we do have the CoreLogic system that does have that information available. And again, one of the limitations that we have of that current system, and again, this is not a CoreLogic issue, this is an issue across the industry, is that for these rural and remote areas, the data simply just is not there to do those type of assignments through a desktop. Again, that's why we're hearkening back to geographic competence from an individual who's familiar with that particular geographic area. And I attend many industry conferences and obviously meet with many lenders who's participate in our program. And what lenders tell me is that they, because of risk, because the data has not been proven, most lenders tell me that they are not supportive of that type of review, that they feel more comfortable with the current appraisal process.
Okay, I see I'm out of time. Thank you all very much for what you're doing for our veterans. Thank you. Mr. Chairman, I yield back.
Thank you, Mr. Rutherford, and now we'll yield 5 minutes to Mr. Banks.
Thank you, Mr. Chairman, and thanks to each of you. There's nothing more infuriating to me than when we discuss issues or restrictions, government bureaucracy, or rules that prevent us from serving our veteran population better. So on one hand, while I'm pleased that we're having the discussion that we're having today, it's very difficult at times to understand why we make it so much more difficult than it has to be to serve to better serve our veteran population. So with that, Mr. London, one area where I'm scratching my head is how exactly do we justify the more stringent, significantly more stringent vetting process for the VA than what the FHA has for appraisers? What is the justification? How do I defend that to the veteran constituents in my district who are frustrated?
Sure, thank you for that question. As I alluded to earlier, VA is simply following the statute. The statute requires us to go through this vetting process. But what I will add to that comment is the fact that, again, this is a benefit that veterans and service members have earned. Again, as I stated earlier, many at great sacrifice. And so not only does the vetting process and our overall appraisal process protect the government and the risk that it may take if the home goes to foreclosure, but it also protects that veteran and service member when he or she is purchasing a home, because they know that they're getting a home, even though the VA appraisal process is not an insurance program, as it can't give the veteran assurance. We request that they get a home inspection to get added assurance, but the appraisal process that we have, because we look at minimum property requirements to make sure that the home is sound, safe, and sanitary, that's giving that veteran and service member that extra comfort that they're not only are they utilizing the benefit that they have earned, but they're getting a sound asset as well.
So I'm brand new. I'm a freshman member of Congress, brand new to this committee. I have a lot to learn, but I did serve in the State House for 6 years. You said the more stringent vetting rules are per the statute.
That's correct.
Are those? is that a statute of rules, administrative rules from the VA, or are those congressionally approved rules that have created that more stringent process?
The statutory reference is 38 U.S.C. 3731.
So are those
So congressional.
rules that that your organization could repeal?
No,
Make
sir.
less stringent.
No, sir, we cannot.
So you're
Not without a
pointing your-
statutory
So you're pointing the
change.
finger at this committee, the Congress, to solve that rather than through the administrative process that you would be involved with.
Well, let me make sure we're clear when we talk about a more stringent, process. First and foremost, as Ms. Bradley indicated, VA can use licensed appraisers, whereas FHA, in comparison, have to use a certified residential appraiser, which is
What
a
I'm trying
bar
to get to the bottom
above.
of is who has created these more stringent rules.
Understood. It's statutory, is my understanding.
It's your understanding.
That's correct.
So it sounds like maybe we need to do a little bit more homework. Maybe you and I, maybe us together with you to find out how we scale back those more stringent rules.
I will assist you in any way I can, and any other member of the committee.
I appreciate your willingness to do that, and appreciate the interest of this committee in this topic, as it is a source of frustration of so many veterans who do deal with this process. And with that, Mr. Chairman, I yield back.
Thank you, Mr. Banks. I yield myself 5 minutes. I want to follow the line of questioning of my colleague, Mr. Banks. I just start with the fundamental question, why do we need a certification? Why do we need government certification? We are exposed, at my understanding, 25% of the loan. The private sector has 75% exposure. They have more risk in this. Why would we need additional standards beyond, and I'm looking at one of the surveys, the conventional prime, process for appraising? Why do we need more than that? I know you didn't write the law. I'm not blaming you, Mr. London, but let's just say you have a blank slate. Let's say that there is no statutory requirements and restrictions on you. What would you do to change the law so that we could manage risk and serve the customer, being the veteran?
Well, as I stated, I'll be happy to work with you and other members of the subcommittee on any legislation that you may propose to improve the appraisal process. One of the things that I can say about the current system and process that we have is I think in part it bears out in the performance that we stated today with the low foreclosure rate and the low delinquency rate. The fact that, just use one of the examples of one of the vetting steps that you have to go through to serve on the panel, is you have to have recommendations from other appraisers, and a second step that's also statutory is that you have to have a demonstration project or demonstration appraisal to show that you have the competency. So the fact that we actually look at the fact of whether or not the person is competent and that their peers will attest to their competency, I think that has helped with the current success that the program is enjoying to serve our veterans.
I do think that the foreclosure rate is good, but, it's comparable to the conventional prime. I mean, it's right there. And yet when the NAR did a survey of appraisers and asked which ones are least desirable among a long list, the number one by far least desirable was to conduct appraisals for VA loans. And then when she cited, Ms. Bradley, the regulatory burden as the top reason that appraisers are leaving the profession, that leads one to believe that there may be too many regulations, too much regulatory burden. So, I could mitigate risk to almost zero, but not serve my customer very well. So there is a balance. I think you'd appreciate that. Help me again understand, well, what are the unnecessary regulatory restrictions, in your opinion, those things that don't have a cost-benefit value in this process?
Well, if I look at the statutory construct, again, the way that I understand it, the fact that we're asking for, if you have experience as an appraiser, that we're asking for an example of the work that you've completed and also recommendations from your peers, From just a pure burden standpoint, in my view, I don't think that that's an extremely high bar for entry to be on the fee panel.
Okay, Ms. Bradley, could you help me with identifying those requirements that are unnecessary and may be a barrier to serving the veteran, rural or otherwise?
As a VA appraiser for the past 20 years, I work for FHA and I work in the conventional market. The VA is the gold standard. It does not need to be changed, in my personal opinion.
Why do so many appraisers say it's the least desirable? I mean, significantly, exponentially greater than most of them on that list.
The question asked, I believe, was which entity are you least likely to work for? And if that appraiser didn't happen to be on the VA-approved panel, they're going to answer no. And perhaps there are many appraisers that choose, as we had said, not to request appointment to the VA panel because misinformation about overregulation. I believe that's the reason it was chosen. Moving forward, I believe for the VA's recruitment of appraisers, if they provided continual education and they do regional training, I believe if they bring in new appraisers who maybe have a misconception that there is too much regulation, that can help them. Appraisers who have never done a VA appraisal before think, I don't know what a minimum property requirement is, I'm too concerned to do it for liability purposes. If there were training for new appraisers to join the panel in conjunction with the open enrollment, I think that would dissuade people from being concerned. Again, it's the highly rural markets that we're talking about. This is not the norm throughout the country. And I need to reiterate, please, the VA is the gold standard for appraisal independence.
So thank you. I've exceeded my own time restriction. And so I'm going to ask my colleague, Mr. O'Rourke, if he has further questions or comments.
Just thank you, Mr.
And
Chairman.
I yield the full 5 minutes.
Thank you. Again, I want to thank you for bringing everyone together and addressing an important issue that in the going on 5 years that I've been on the committee, we really have not addressed. And so I'm grateful for that. And I think something good's going to come of it. I do want to stress, because there is very legitimate concern today about availability of timely VA loans and appraisals in rural areas, especially those that are experiencing an economic boom, as the chairman's district in Oregon is, and as we're seeing in some parts of Texas. And I want to make sure that we meet that need and address that concern in a way that's going to be effective without at all diminishing or undermining the extraordinary success that this VA loan program has had. Samantha, my team, was just telling me that there was a 24-month period between 2014 and 2016 where these VA loans were the lowest average rate in the country. So we're providing a tremendous earned benefit to the veterans who put their lives on the line and are getting that extra help as they should. And we're also protecting the taxpayer as we should, and we're also increasing the rate of home ownership significantly as we should. So lower rates, lower foreclosures, more home ownership, all very good things. Let's meet the demand in some of these extraordinary, unique cases, as the chairman brought up, and as we're seeing, we were talking about Odessa, Texas earlier today, and I know there are other parts of the country that face this. And I wonder, and I'm of course speaking on just on my behalf, but whether or not this panel could come back to us with a unified approach to addressing this that may or may not require more legislation. How do we, if only 42% of appraisers in this country choose to work for the VA, how do we increase the rate of participation? If we're having these unique challenges in rural and underserved districts, how do we meet them? Do we need to change statute and law? Is it an act of Congress, literally? And again, from the benefit of 4+ years in this place, very hard to get something through this committee, the House, the Senate, and onto the President's desk and signed into law. So this is urgent, if this is a crisis, let's not wait for statute. If the 5 of you could agree on something and come back to us within a month and say, here are 3, and you offered a number of ideas, but they were each offered individually and separately. If these are consensus opinions, or you could arrive at them and come back to us, and perhaps the VA voluntarily says, you know what, here's some stuff that doesn't require statute, we're going to do it because it's going to ensure more veterans get into more homes more quickly, done. Or, you know, you may need to make some tweaks to law, you know, that's on us. Or here's a way to reach out to appraisers, you know, in some of these markets. Or as the committee staff just suggested, is there some way to cross state lines where you have the capacity in California in the north of that state that can serve Oregon, you know, in the south of that state? I don't know, but you all know this stuff. You're going to have the solutions. And I know, just having worked with the chairman now for a little over 3 months, he gets on this stuff, and he's already probably working on, if I had to guess, on legislation, which I'd really like to see and I think could make it better. But if we can do something in addition to that legislation or in place of that, all the better. And forgive me, Mr. Chairman, I'm not trying to predict what you're doing. This is such an important issue. I want to make sure that we don't wait on it. If you could come back to us within a month, the 5 of you together,
absolutely,
that'd be great. So I yield back.
You took the words out of my mouth, and you know, you've been here a few more years, and so look how you just beat me to the punch and shame me in front of my colleagues like that. I couldn't agree more. You guys are closest to the problem. I've heard good responses, but I think if we could frame them and maybe the ranking member and I can work on framing this with more than just one central question, maybe 3 to 5 questions. You guys work on it and come back and submit those for further discussion. But this ought to be something we can solve. This ought to be the most easy to get to bipartisan solution with stakeholder input of anything I have encountered yet. And so I know there's no problem that's easy, but relatively speaking, we ought to be able to tackle this. So I appreciate your suggestion. Right on, I second that. And may I just ask one more question of Mr. Johnson? Just would y'all indulge me for just a minute? Your product, how would your product apply to this problem-solving exercise? And is it mature enough and nuanced to meet this particular problem? I'd like to hear more from you about how we can bring technology to bear to provide greater access, especially in the rural areas.
Absolutely. Thank you for the question and the opportunity. I see this as primarily an efficiency utilization. How do we best utilize the resources that we have available to us? As has already been stated, the VA program is the gold standard, and the VA has done a wonderful job servicing veterans, especially in light of this increase in demand. They've increased fees, they've increased their recruitment programs, they've onboarded several more appraisers, so they've been doing an excellent job with what they have available to them. I think that the product that we're talking about today, the desktop appraisal, allows appraisers to focus on where they apply their knowledge and their skill set, as opposed to driving hundreds of miles every day to look at homes and take pictures and do measurements. Other qualified professionals in the industry can perform those duties at different locations while the appraiser is looking at the data that's provided. Right now, we can provide that information within moments, as opposed to decades ago when this process was created, it took a lot of time. So if somebody else can, another industry professional can take the photos, drive out to the locations, maybe they live nearby anyway, then you supply the appraiser with the data they need to apply the skills that they've learned and the expertise that they have, and they don't have to spend their time doing those other tasks. So it's more about the efficiency utilization of the resources in a couple of different areas. That's one example. The other example is that there's a large portion of properties that do fit into a standard category to where they're not so complex. And if we can apply this technology into the non-complex properties, we free up time again for the appraiser to go visit out in the rural areas and be able to attack those problems. So I think there's a couple of different ways that the product does help the situation, help the appraiser be more efficient and more effective, and help the veteran to be able to get into the homes that they want without having to waiting with this unknown lead times and unknown costs.
Great, thank you for your comments. Mr. O'Rourke, do you want to close this with any comments? Are you okay? Well, like the ranking member said, and I agree wholeheartedly, let us frame this, and if you are willing, Mr. London will just submit those to you to frame it up, and then I would like for you to work with the stakeholders present and come back with recommendations. Don't let the current statute or law restrict your vision for a better construct to serve the customer, which is the veteran, as we manage the risk and steward the taxpayer monies. But there's got to be a better way. There's got to be some creative solutions here, and I think you guys are just the right team to give us some recommendations. I really appreciate your time and your preparation and your thoughtful responses. So I now ask unanimous consent that all members have 5 legislative days in which to revise and extend their remarks and include any extraneous material on today's hearing. Without objection, so ordered. Thank you all again for being here today. This hearing is now adjourned.